I invest in the market and I hope for the best over the next 20 to 25 years, and I try and select the best and appropriate asset allocation. As I say, if you're saving regularly and you're saving over a longer period, it's not so critical. I think your point is that, you know, what happens when you get to retirement, and this comes back to your statistic right at the start, which said 87% of people have no idea how they're going to calculate their retirement income, or even the tools available to them to create that income. I mean, there are tools in the market, there are products in the market that will offer you a guaranteed income. So at one end of the spectrum, you could take all of your money, convert that into a guaranteed lifetime annuity. You know, most people don't want to do that. They don't like to lose control of their capital. At the other end of the spectrum, you can invest in a broad portfolio of different assets, and you take your chance longer term with the market, and you ride through the cycles. And then there's a middle way, which is a combination of the two, which is where I think the industry and advice can help, which is where you're keeping control of your capital, but you're also guaranteeing a certain level of income from those assets. And I think this is where, you know, we can educate and we can help. There are tools available. Clearly it's difficult in a low interest environment because returns overall are down, but it is just a cycle. And I think what we have to have is a long-term perspective.
But if you take that point that you made and has been made a few times about moving the responsibility of this planning from the government or from the corporate, the employer, to the individual, which has been happening over a series of years in the West, how efficiently have the individual, the employee, been executing that responsibility? And what is the consequence of maybe managing it inefficiently, which I'm sure must happen?
What we've tended to see is product design improving to help this eventuality. So what you've seen are the invention of lifestyle funds is a good example, where the asset allocation is gently shifted over time as the employee reaches retirement age, or the point at which they're supposed to retire, and they're shifting into safer assets like cash and bonds. So that's one of the tools that we've seen occur. The other things are things like auto-enrollment. You know, in many countries now you have an auto-enrollment process where rather than ask the employee, would you like to join the pension program, you're auto-enrolled and you have to opt out. All those things have really improved the take-up, as well as linking the amount paid into salary. All those things make a huge difference over time. But it's not perfect. Ultimately, it's down to the individual.
I've heard a few times we mentioned, and at our table when we were talking about insurance, the word education has come up a few times on the panel, and the role and whose responsibility is to do that. And I just wanted, and one in our table came up the idea of the media has a role to do that. And having worked in the media myself for a long time, media struggles with subjects they don't understand, so they tend to ignore it. And I just want to come back to you, Frank, if you grab the microphone there, and your sense about in the regional media and the ability for the media to report on these. If you take these statistics, 87% people who don't know where their retirement go to, that was ever made a story of, I don't know. But maybe one of the reasons it wasn't because the media struggles with the subject. And I'm just wondering, what do you think about that idea?
Well, Sean, I think you're right. I think we do struggle with fairly arcane subjects like insurance and reinsurance. I think we struggle with personal finance generally. It's usually been regarded as the kind of poor relation of business news and of financial news. I would imagine that the global financial crisis may have changed individual perceptions of that now, and because the macro financial thing that we've been through has affected all of us personally. But I think the newspapers do struggle to, come to terms with personal finance and with insurance. I mean, I have certainly written about the insurance industry in this region. I must say that I avoided it as far as I could in 25 years in Fleet Street. But I've written about it here.
Well, it's a big story in France as people, try to put up 2 years on the retirement age, and there's riots in the country and it collapses.
This the kind of thing that I'm referring to here, where it affects people directly. That's when you'll get big coverage of it. But the ins and outs of the insurance industry will not get great coverage, I don't think. I think we do have a job to explain. As I have written about it here. but largely in terms of bemoaning its absence. And that chimes with the kind of figures that you've been talking about, how underinsured the region is. But I agree with you. I think we do have a job to educate more here, but we must begin by educating ourselves, perhaps.
And the stakeholders coming together, as they've done around real estate, for example, the creation of the likes of RERA and so on. Thanks for that, Frank. Michelle, I wanted to come. Yeah, please.
Thing here,
yeah.
And this is a general statement, but regarding insurance companies over here, with very, very few exceptions, most insurance companies are not insurance companies. They're bad asset managers. They have more money coming in from assets or how they play the market, whether it's in the property market or whether it's in the stock market, than they actually do in underwriting insurance, with very few exceptions over here. Well, when you have that, we don't really actually have an insurance sector per se.
Any pushback on that from anybody? Rebuttal? Omar Wahabi, CEO of Wahabi Insurance.
Basically, it's not a rebuttal. I'm agreeing with Mr. Mish'al. If you notice, a lot of the insurance companies, when you look at the balance sheet and the profit and loss, in 2008, 2007, 2006, the income from investment was substantially much more than income from insurance premiums. And if you look at the retention element of the insurance, most of the insurance companies here, it's basically maybe 1%, 2%, 2.5% of their risk. So until they get more acquainted with risk management and become better actuaries and so forth, I think the insurance market here in the Middle East needs a quite substantial time to mature and develop much more.
Okay, I'd like to.
I can
sorry.
add that I think one of the consequences of the crisis is the fact that there is a flight to quality, and I think people are being much more selective and much more careful in terms of the choices they make, the provider that they choose, and again, I think they're more selective in terms of the advice that they get as well. So it's a combination of who's giving the advice, and who's going to be the provider, and can I trust that provider? Is this a long-term player? Is it somebody that's going to meet its obligations in the long term?
Well, that's exactly where I wanted to sort of end up in the sort of final comments of the crisis, where we sort of started this morning, and Simon punctuated the anniversary that today is in terms of the day I shocked the world a year ago with the restructuring of Dubai World Debt and the crisis as a whole over the last